LinkedIn leaving China. Microsoft will shut down the social media platform there as the country expands its corporate crackdown. LinkedIn was the last major U.S. social media platform operating in the country. Twitter and Facebook have been blocked for more than a decade. Tech analyst and CoinDesk executive editor Pete Paschal joins us now. Pete, not a surprise. What do you make of this move?
Yeah, good morning. So this is, this is a movie we've kind of seen before. As you noted, Facebook and Twitter don't operate in China for similar reasons, and that a decade ago, Google was trying to establish its presence in China. But because of certain censorship restrictions that the Chinese government imposed on them, they really just couldn't make it work. Now, the difference here is LinkedIn has been operating in China for a while. It's been there since 2014, even before Microsoft acquired them. And it's been sort of operating decently since then. But this is really all part of the recent Chinese crackdown on tech companies and making sure that they are serving the Chinese government and not the other way around. So, they're reasserting their dominance, but also they're really setting restrictions around data. And really wanting the tech company that operates within China to make sure that their data is accessible and basically can be given over to the Chinese government at any time. It's really understandable that LinkedIn wasn't really able to make that sort of arrangement work, in addition to sort of the censorship that they put on influencers and people speaking out on the network.
Right. It raises the entire issue of the cost of doing business with the Communist Party of China for Americans, and it means jeopardizing your relationship with American customers. It raises a whole host.
Yeah, there's a real reputational risk.
Right, exactly. Bitcoin topping $60,000 overnight as the Securities and Exchange Commission is poised to allow the first Bitcoin futures ETF. This as the CEO of Coinbase writes an op-ed calling for a new approach to cryptocurrency regulation. This appeared this week in the Wall Street Journal opinion pages. Pete, your reaction to this?
Yeah, well, a Bitcoin ETF in the U.S. has been kind of an anticipated thing for a long time, and up until recently, it's been wishful thinking. It appears this time it might actually happen because it's kind of an ETF light. Apparently, it's based on the futures market and not the actual Bitcoin market, which might be enough to get it through. As I understand it, the SEC and Gary Gensler have until basically midnight on Monday night to to nix it. But indications sort of seem to show that they're supportive. I think experts are saying there's about a 75% chance. So this will be a step. It's going to be a step in the legitimacy of the space in the minds of a lot of investors. And I think one of the big issues with Bitcoin and generally investing is the steep learning curve that you kind of have to really understand what you're investing in. And there you kind of need to know more about wallets and blockchains and all these kinds of things. And an ETF is kind of an easier way to sort of ride the wave of interest. Whether that's ultimately a good thing or a bad thing kind of depends on your outlook on crypto generally, though.
Right. Pete, thank you so much. Great to see you. Pete Paschal, always a pleasure.